personally think about Bitcoin, it's not a short-term get-rich-quick scheme, right? Bitcoin is long-term savings technology, and people shouldn't necessarily expect to do a 10x in 12 months, even though it's certainly possible, and Bitcoin has done it plenty of other times. But you should expect, hey, there's going to be a lot of short-term volatility for Bitcoin in the short run, mainly because it's simply growing so fast.
Welcome back to the CoinBeast Podcast. Today, I'm joined by Joe Burnett. Joe, welcome to the podcast.
Thanks, Luke. Glad to be here.
I'm glad to have you. So we actually met on a little three-way podcast back in 2021, and we talked a lot about hyper-Bitcoinization. Most people will know that I don't really like to beat around the bush here on the podcast. So I want to jump straight off the deep end, Joe, and start talking about one of your reports you recently put out, looking at the valuation for Bitcoin in the future. And I get a lot of pushback because I've also written a report looking at the value of Bitcoin, and I said it's going to be 65 million. Most people think I'm nuts. And I was thrilled to read your report because you had a pretty massive price prediction for Bitcoin as well. So Joe, let's jump straight into that. And I just want to maybe, what do you think the TAM of Bitcoin is? Because I remember reading that report, it got me all sorts of bullish. So let's start there. What's the TAM of Bitcoin?
Yeah, totally. I mean, it's like whenever you say, hey, Bitcoin's going to be worth X million dollars or XX million dollars, people that aren't looking too closely into Bitcoin are normally like, what is this guy talking about? Like, this is probably insane. And the way that we took the approach that we took to kind of answer this question in one of the recent reports that Blockware Intelligence put out was kind of looking at, okay, which asset class is Bitcoin going to quote unquote demonetize? So kind of in our view, we kind of have this idea that today there's not a good money in the world. So people resort to storing wealth in all sorts of different asset classes. This could be real estate, could be cash, could be things like gold, it could be things like equity. And it all comes down to, okay, the dollar or the euro or the yen is simply an inferior store of value, and we are constantly having to chase yield because these fiat units are constantly being devalued. And so we kind of took an approach of looking at, gold, debt, equities, real estate, and looking at all of these. If you combine them, we came up with each Bitcoin would be worth roughly, I think it was $23 million. And we can go through like how we actually got to that number, but the very high level overview is that Bitcoin would simply be demonetizing the other assets that people use today as store of value assets, but in the future they may not do that.
Yeah, and that's a really that is a great point. That's Bitcoin is 100 times better than any other asset class in terms of storing value. And what I really love about this report that you guys put together was you put an exact figure on how much of a monetary premium is in all of these other financial asset classes around the world. So I'm going to read a quick little sentence from the report that you guys put together. And it says, should Bitcoin cannibalize the monetary premium of these financial assets, it would then represent 61.38% of the total market cap of financial assets. So are you saying that of the hundreds of trillions of dollars in the world today, 61.38% of the entire assets value in the world is a monetary premium, and it's like above the utility price of these assets?
Yeah, that's basically the conclusion that we came to after analyzing each asset class and trying to, value what the monetary premium is in each asset class. So yeah, that's basically what we came up with.
Yeah, that's brilliant. And just kind of breaking this down for the listeners so they're following along, the guys at Blockware deemed that there's around a 53% monetary premium in the total market cap of gold. Equities, 58.7% of the total equity valuation is monetized. And real estate, this is the most interesting one for me. 23.1% of all of the value in real estate today is like a monetary premium. So I just really love this report, Joe, and maybe we can start actually going through different sections of the report. So here's a really nice pie chart that you guys popped together. Debt market 300 trillion, real estate 326 trillion. Maybe you can talk to us. I want to actually start with equities. I would love to know how you guys deemed what portion of the global equity market has been monetized since we've been living on this fiat fiasco of the past 50 or so years.
Yeah, totally. This slide in particular, we actually another guy on our team, Mitch, created it, so I can kind of explain my best analysis as to like why we said, okay, this percentage of monetary premium should go into Bitcoin, where that's currently in it. So like the general idea is, okay, we have this like productivity growth, but we also have just the amount of a specific amount of monetary premium that people are just pushing into, for example, passive index funds that they're just trying to get a market-based return on. And so like the idea is, okay, if you're trying to, invest in a diversified portfolio of US equities or global equities, you're not really finding alpha in the market. You're more just trying to store wealth for the future. And that's kind of, and instead of investing in a passive fund where there's counterparty risk and there's management fees, you should just be using the best savings technology that exists, and that's something like Bitcoin, where there is no counterparty risk, there are no fees for holding it or management fees over time. You won't get devalued, whether it's through issuing new shares or issuing new equity or issuing new debt. And so the idea is, okay, you don't need a diversified portfolio of many different companies. You should just hold Bitcoin.
That's what money's supposed to do. You shouldn't have to be a gambler and invest in all of these different asset classes. See, I thought that was fascinating. 58% of the equity market is monetized. And then the real estate market one was one that surprised me, because I thought when you started investigating what portion of that real estate market was monetized, did you expect to come up with a figure of around 23%, or did you think that it was going to be actually a bit larger, the monetary premium in the real estate market?
Yeah, it's a good question. I think a lot of real estate, like right now, the way we're able to build, so much real estate is through debt. So it's kind of pulling, resources forward that we may not have today to build actual, massive houses. But at the end of the day, these are like physical assets that exist that are made up of real materials, and people can live in them. And so at the end of the day, I kind of did somewhat expect it would be, around 20 to 30%, because unlike equities, where if the markets continue to get more and more efficient, there's 8 billion people competing to, take profits from each other. There's AIs in the future competing to take profits from each other. Um, it's easy to see how profits in like the equity market could get, smaller and smaller over time. But in the real estate market, you still have a physical asset that exists that people can live inside. You can rent it out to certain people. And so, yeah, it is interesting how the monetary premium in real estate is, in our report, smaller than some of the monetary premiums in other asset classes. But at the end of the day, real estate is kind of this, real tangible asset that can also generate some sort of cash flow. Of course, over time, it's, things are going to break. You're going to pay property taxes. You're going to need to upgrade parts of the house. So it's certainly not perfect. And Bitcoin is still, in my opinion, a better form of store value over the long run. But as far as compared to other asset classes, I think real estate is one of the top ones.
Yeah, interesting. Really interesting take. It actually made me rethink what I normally call real estate. I call real estate a little bit of a shitcoin. But actually looking at the valuation and considering the fact that construction prices have increased a lot over the past 30, 40, 50 years, it certainly making me just reconsider my views on real estate just a little bit. But so I would encourage the listener to go and read this report. It's fascinating. I'm an absolute sucker for pretty charts, and there are lots of all sorts of very pretty charts in this report. So obviously, great work by you guys over at Blockware. Link to this one will be in the description of the show. But I wanted to kind of finish up on the conclusion of the report, because I think if you take all of the monetary premiums in all of those asset classes, and you guys came up with the hypothetical view that if all of that flowed into Bitcoin, you'd be looking at is that a $22 million per Bitcoin price tag? Joe, is that what you expected when you began the report? Did you think that the price tag per Bitcoin would be higher or lower?
Yeah, I mean, it's about what we expected. I mean, I've done at Mimesis Capital, a couple years ago, um, an analysis of okay, like what might this look like as well, as far as like okay, like if Bitcoin really is the best monetary technology humans have ever discovered, and we no longer need to store wealth in a diversified portfolio of a bunch of different things just to keep up with the monetary growth. It was about similar it was similar numbers to what I'd come to in the past, but yeah, I think as someone that may be more in traditional finance, or someone that hasn't really looked too far into Bitcoin, it probably sounds pretty insane.
Yeah, yeah, it certainly does sound crazy to people who haven't just considered, why asset classes around the world are broken and have been monetized. Joe, what do you think about the time frame on this report? So we've got the end conclusion of where we believe Bitcoin should be valued, but what kind of time frame are you looking at for Bitcoin to start approaching these big milestones?
Yeah, it's such a good question. And I think we're going to talk about another report that I led, which was Energy Gravity, that's kind of talks about different cycles of Bitcoin adoption, and more like on timing wise, and why at least me in particular, I think that, I don't see it going to 22 million roughly anytime soon, unless there's just like a total macro washout where like fiat currencies are actually worthless, which I don't think is going to happen in a short period of time personally. But yeah, I mean, I think it could take decades, 10 to 20 years, um, maybe even more. I'm not too sure, but yeah, I mean, I don't think that Bitcoin, when I personally think about Bitcoin, it's not a, short-term get rich quick scheme, right? Bitcoin is long-term savings technology, and people shouldn't necessarily expect, to do a 10x in 12 months, even though it's certainly possible, and Bitcoin has done it plenty of other times. But you should expect, hey, there's going to be a lot of short-term volatility for Bitcoin in the short run, mainly because it's simply growing so fast and so few people really understand what this is. But yeah, I think as far as timing to get to potentially get to some numbers like that were mentioned in that report, I mean, it could take 10, 20 years.
Speaking of volatility, I wasn't actually going to ask you about this, but you brought it up. I personally think volatility is going to continue to increase over the next 5 to 10 years. And a lot of other people push back on me and they say, oh, but what about these diminishing returns in the Bitcoin 4 year cycle? Each 4 year bull run, Bitcoin's, giving you lesser and lesser returns if you measure Bitcoin's bull run from the bottom of the bear to the peak of the bull market. What's your thoughts on that? Do you think we're going to continue to see these diminishing returns in Bitcoin?
Yeah, it's a great question, honestly. And I feel like a lot of people have talked about it for a number of years now, and I think like going into last cycle, some people were saying, oh, from and after 2017, Bitcoin hit 20K, it fell all the way down to 3K, and that was, I don't know, an 80 something percent drop or close to it. And coming into this cycle, or the 2020 2021 cycle, I think a lot of people were saying, okay, Bitcoin probably won't go down 80% again. That's very unlikely. And then even when we saw Bitcoin, actually in the 60K range, 69K, I think was the top. As it started to fall, I think a lot of people were kind of in the camp that, okay, we didn't get a massive parabolic bull run, or we got a parabolic bull run, I will say that, but we didn't get like the blow off top above 100K that many people were probably expecting. So like the returns last cycle were muted. And then I think because of that, some people thought, okay, maybe we won't fall, the 70 or 80%. And then we did fall to 70, 80%. So Yeah, I mean, going forward, I I do think Bitcoin's volatility will continue to be here probably for a significant amount of time. I think personally, I think Bitcoin's volatility is kind of a feature of its adoption. It's not like a bug that many people perceive it as. I think volatility is kind of what enables it to go on these massive parabolic bull runs. And the downward volatility is what shakes out all of the weak hands, all of the over leveraged balance sheets that can't withstand, something like Bitcoin. And the only people left holding Bitcoin, and especially the only people left buying Bitcoin from the weak hands that are selling, below $20,000 per Bitcoin, are people that, like, one, they have strong balance sheets and they don't have a ton of debt, and then two, they're strong believers that Bitcoin is this new unique monetary technology that's unprecedented, and it is the best money humans have ever discovered. And because of that, they're dedicated to Bitcoin. They're not going to be selling their Bitcoin anytime soon. They're going to be willing to hold Bitcoin up for a significant amount of time and for significant potential return. And so, yeah, I mean, I think Bitcoin's volatility is likely going to continue probably for some time, just because global adoption is still so small.
Yeah, you can't shake those psychopaths. They're not going to sell their Bitcoin no matter what. Those crazy laser-eyed psychopaths on Bitcoin Twitter, they ain't selling. And yeah, I tend to agree. I think volatility is going to continue to increase. But listeners, don't listen to me, because in the last bull market, I was actually one of the people who was saying that I don't believe Bitcoin will see another, 85% correction. And here we have it. We've had a very similar Bitcoin bear market to the previous one in 2018 and the one in 2015. So Bitcoin
Yep.
just continues to be Bitcoin. Actually, another question I wanted to ask you a little bit later on, but I'm going to throw it at you now. You recently interviewed Lynn Alden, and you guys were kind of talking about, okay, what drives the Bitcoin bull markets? Most people think it's the halving. And then Lynn's kind of popped up in the past year or so, and she started to say, hey, hang on a minute, it might actually be something else. What do you think drives the Bitcoin bull markets, Joe? Is it liquidity in the system, or do you think it's the Bitcoin halvings, or both?
Yeah, I mean, I love this question. It's fun to think about. I definitely think it's probably both, right? Like, it's so interesting because there's just such a small sample size of, like, what's actually driving Bitcoin's parabolic bull runs. I mean, Bitcoin has had, I don't know, 4 or 5, like, significant parabolic bull runs since, like, its inception, truly from zero. And, still it's kind of hard to tell exactly what's happened because, the first couple were just Bitcoin was so small. It probably took like one person to put, $10,000 in and it went on a parabolic bull run. Um, but yeah, I mean, I think the last few bull runs have definitely, they both core, or I guess potentially all three, or at least the last two, when you're talking about like 2017 and 2021, both correlated with a halving right before the bull run. And then also just kind of like a dovish macro situation where the Fed was being very accommodative into money supply growth year over year was growing fairly rapidly. Stocks were rallying, Nasdaq was setting new all-time highs, and then once you see, Nasdaq starting to fall, you see, debt markets, or at least like high yield markets, under some serious stress. That's gonna, like, hurt Bitcoin, and Bitcoin gets hurt. So it's very, very obviously correlated with macro conditions. I know a lot of people like to debate if the halving has effects on the price of Bitcoin. I think it does, but I also think it's macro is probably, in my opinion at least, probably the main driver for Bitcoin. But then again, Bitcoin does just, like, go on these massive parabolic bull runs, unlike any other asset class that we've really ever seen. And so it's kind of like you need that catalyst of price going up, which is probably a combination of a supply shock at halving events and easing macro conditions. And then once the price gets moving up, that it's kind of like a reflexive loop to where, okay, people see, what is this Bitcoin thing? I'm going to learn more about it. Like, oh wait, this is the only immutably scarce, digitally verifiable money that's ever existed. It's perfectly scarce. There's only going to be 21 million of it. Has all of these, like, super unique monetary properties that make it the best money that we've discovered. And then, the price is kind of like marketing for Bitcoin education. And then people learn about Bitcoin. They're like, okay, I'll buy some, whatever. And then, some people buy it. And then all of a sudden, too many people are buying it at one time, the price gets way overextended for where we currently are at global adoption. And then the price starts to fall. And then people that don't understand it, are selling it. They don't care. And the only people buying it at the bottom of the bear market are the people that, really understand what Bitcoin is and why it's important.
Yeah, I think it's a really interesting topic to talk about, especially if we do have a halving coming up in the next year, and there could be a change in environment in terms of liquidity in the next, 3 to 6 months. A lot of people are kind of talking about a Fed pivot possibly coming around the corner. So I think that's a conversation that'll be growing, and that's a great question you asked, Lynn. But Joe, there's probably another question I definitely wanted to bounce off you. There's a halving coming up, and a lot of the fudsters out there are saying, oh, these Bitcoin miners might not want to mine the Bitcoin chain. And everybody says in 2140, Bitcoin's doomed. So, Joe, what do you think? Is Bitcoin going to be dead in 2140 when we can't pay the miners?
Yeah, it's such a funny question that a lot of people have been bringing up recently. We published a report with Blocker Intelligence and Riot Platforms, which is now, like, I think, the largest publicly traded Bitcoin miner in the world. We published a report on this exact topic. We're basically analyzing, what's going to happen over the long run as the block subsidy, which is new Bitcoin being mined, trends literally to zero. And it's kind of interesting because a lot of people, there's kind of been like mixed narratives in the Bitcoin world and like outside the Bitcoin world, wherein transaction fees are high. People are saying, "Hey, Bitcoin can't scale; it'll never work." And then you had Bitcoiners in the past saying, "Hey, Bitcoin is great security, right, or whatever." And then now that transaction fees are low, you have the no coiners saying, "Hey, Bitcoin is not secure. What are you guys doing? This is never going to work." And then the Bitcoiners like, "No, look, Bitcoin's scaling and it's still working properly, so it's secure and it's scaling." Um, and it's interesting. Both sides like to paint the narrative that best fits what's happening from their perspective. And I kind of took the view that, okay, in the best world, Bitcoin has potentially low fees and there's no censorship. And so the idea of this report was, okay, there really only needs to be fees on the Bitcoin network if there are scaling issues. So if there are scaling issues, users will be incentivized to use things like Lightning, Liquid, Fedimint, other scaling solutions, sidechains. And then if if there's an attacker, meaning someone has greater than 51% of the entire global hash rate, and they're actively trying to censor transactions, then the natural market-based response for this is just simply users increasing their transaction fees. And so when users increase their transaction fees, the idea is, okay, maybe there's dishonest miners that are looking to censor specific entities on the Bitcoin network. But as users begin increasing their transaction fees, that incentivizes honest miners to get plugged in, start including those blocks in the longest chain, and maybe even the attacker says, "Hey, why am I censoring these transactions? People are willing to pay 100 1,000 sats per virtual byte instead of just 1 sat per virtual byte, and they just make more money." So the idea is, Bitcoin, people will talk about this idea of a Bitcoin security budget, and I think that's kind of the wrong way to put it, because Bitcoin security budget, in the sense that, what is that? Okay, it's transaction fees, right? Everyone would kind of say Bitcoin security budget is transaction fees when it comes to settlement finality. And so if there is an attacker, the natural response for the market, like I said, is for higher fees. So the budget, the security budget, quote unquote, which I don't like that term, but I'm using it just for the sake of argument. The security budget of Bitcoin is reflexive, it's variable. And so it responds to attacks. And if there are no attacks, then you don't have to pay for settlement finality because no one's actively trying to censor you. And so that's the general idea that, hey, the security budget is kind of a misnomer. You only need to pay for fees if Bitcoin isn't scaling properly or someone's trying to censor your transaction. If neither of those are occurring, then you can pay a small fee, 1 sat per virtual byte, which is right now for like a basic transaction is maybe like 3 cents or so. And that's just going to be good enough. Of course, as I mentioned also in the report, Bitcoin does have a block weight limit. And so there's a limit of how much data you can put in each Bitcoin block. And if we're actually going to onboard, the rest of the world to the Bitcoin network, there's going to be a significant increase in the amount of throughput that we're going to need to send and receive Bitcoins. And so it's very likely that we're going to have a lot of future scaling issues on Bitcoin, and fees probably won't be, 1 sat per virtual byte forever. So I do expect fees to go up, but the point of the report was basically saying, hey, fees don't actually have to go up for Bitcoin to be secure in the year 2140.
Yeah, it's the report was really interesting. It made me think about a few things. Kind of drives home the point that the fudsters will always FUD Bitcoin. So I love how you guys point out in 2017, Bitcoin fees were high and everybody said, oh, Bitcoin's dead, the fees are high. And today the fees are low and they're saying, oh, Bitcoin's dead, there's no demand for block size. So Bitcoin's dead because there's low fees. That was a really important point I wanted to double click on. And then that's another great report you guys have written. And it kind of also highlighted how anti-fragile Bitcoin is. Like I've kind of looked into these 51% attacks a little bit. I've watched a couple of Andreas videos and, he kind of, smacked that one out of the park for me. He said, okay, Bitcoin's pretty anti-fragile. But reading the report, it was a good refresher to just show that, if an attacker starts mining empty blocks, all of a sudden fees go up, and then obviously the demand for a well-behaved hash rate to join the network and mine those fees goes up enormously. So that was really illuminating for me. And
Yeah, to- totally. Another point that I think is super important that I forgot to mention is the idea that, okay, so that's the natural response to censorship is in transact users on Bitcoin increasing their transaction fees to get honest miners to include their transactions in a block. The other attack that is theoretically possible is, okay, you're, sending, or someone is sending you Bitcoin and they also happen to have 51% of the total network hash rate, which obviously right now would be pretty insane. It's not really even possible, but theoretically, let's say like, fees are really low and someone else obtains, 51% of the hash rate, or they have 51% of the hash rate or more. They could theoretically try to do a double spend. So like, as they could send you Bitcoin, and then uh the Bitcoin gets, you see it in your wallet, you see a confirmation, and then after you see the confirmation, they're secretly mining a longer chain that doesn't include that transaction, or it has that transaction sending it back to yourself. And so if you're ever worried, like if you're transacting with someone and you're worried about them sending a double spending on you, you just simply have to wait for more confirmations, right? And so it's kind of like a weird thing where it's like, if you're sending a very large transaction, like if Michael Saylor's buying like a million Teslas from Elon Musk for all of MicroStrategy or something like that, that transaction is going to take, like, it's not like you just send billions of dollars, and like even today you don't send billions of dollars in a wire. Like that's going to be a transaction that takes place over probably like years. And when that happens, like, it's not like Elon Musk, people are worried about double spending Bitcoin. Like Elon could kind of double spend the cars as well, right? He could just not ship you the cars over time. And so it's like both would be playing out on like a long enough time frame where it's like, okay, he could either try to double spend the Bitcoin, which would be pretty difficult considering you have to have 51% of the hash rate. And right now that's pretty impossible. Even if the future fees are low, that'd still be potentially pretty hard. And even if he did have 51% of the hash rate and he was trying to double spend, it's like, all right, he could just double spend his cars. Like he could just not send you the cars anyways. And so it's kind of a weird, not very scalable attack, in my opinion. And it's also not like, okay, if Elon does that and he tries to double spend the Bitcoin that, or Michael Saylor tries to double spend the Bitcoin instead of paying Elon, this is like a world where, there are laws, right? And like there are legal contracts where if Michael Saylor owes, Elon Musk $1 billion worth of Bitcoin, and all of a sudden he takes the Bitcoin back, just like if Elon Musk took the cars back, it's kind of like, okay, you still owe me like 1 Bitcoin, and Elon Musk is probably just going to come get his cars from you. So it's, the double spend attack is interesting, and honestly, I don't really think it's very scalable attack, and it's kind of like over, or at least from a mining perspective, it's kind of pointless.
Yeah, it's really like Bitcoin. The more you look into Bitcoin, it is really anti-fragile at all sorts of levels. And like the economic incentives of this thing that Satoshi has put together is absolutely beautiful.
And that's all I got time for you guys. I really hope you enjoyed that episode with Joe Burnett. If you did, feel free to slap a like on the video and subscribe to the channel. Doing those things really does help this channel grow. And the faster we grow this channel, the bigger name guests we can bring on to provide with you guys the best information in the Bitcoin space. So of course, let me know in the comments down below what you thought of this episode with Joe. I thought it was very interesting to hear about how anti-fragile Bitcoin is. When you really look underneath the covers, you do come to the realization that even under 51% attack scenarios, Bitcoin is incredibly anti-fragile, and that is what we want. And I actually had a little bit of technical issues in this discussion with Joe, and it cut our discussion short. That's why we didn't really have an outro in that one. So, of course, I will be having Joe back on the channel in the not too distant future to discuss all things Bitcoin, as well as his views on why he thinks a lot of money could be flowing from the crypto casino into Bitcoin. Okay, so we're going to be talking about a lot of the regulatory stuff, and we're going to also be talking about why all of these people right now are minting NFTs on the Bitcoin blockchain. So we're going to be breaking down what ordinals are and what Taproot did, okay, and whether Taproot was the Trojan horse for big blocks. Okay, we're going to be discussing all of that in part 2 of my discussion with Joe. We'll be dropping that one in the not too distant future, so stay tuned for that one. And if you think $22 million per Bitcoin is even slightly possible, I think you probably are a little bit short Bitcoin and you want to buy some more Bitcoin. And if you do, you can get $10 of free Bitcoin if you sign up with Swan Bitcoin using the CoinBeast link that is in the show notes of today's description. And if you want a hardware wallet to put those sats that you buy on Swan, make sure you check out the Foundation Passport. I believe you can get $10 off one of those if you use a promo code BEAST. And our final little show sponsor is, of course, the Bitcoin Miami 2023 conference. If you guys want 10% off your tickets to Bitcoin Miami, you can get 10% off them if you use promo code CoinBeast. Okay, so check out all the show sponsors. Let me know in the comments down below who you want me to interview next. Okay, we have a long name of guests lined up on the show already, but of course I'm looking to add new interviewees to that list by the day. So let me know who you want us to interview next, and I hope you have a good day, and I'll see you all in the next video.